Okay, so let's talk about stocks themselves. Okay, we've talked about investment accounts and the economy, but let's talk about stocks themselves. But before I do, let me give you just a quick economic update. So, and the market update. So obviously today the markets were up quite a bit. And this week, it's been trying to kind of come back up, which is nice. I told you guys that there was no economic data that supported this type of volatility. And if you remember last week, or if you guys paid attention to the numbers that were released about the GDP for the US GDP, it was up 3.5% last quarter, which is huge. We have not seen those numbers in a while. So it's all overhype right now is what the markets are doing. So don't panic, which has been my message to you guys for this whole month. It's fine. So we'll just end it with that for the market update. Okay. So first of all, a shout out to my very magnanimous boyfriend for letting me use his very expensive camera to record. Thank you, John. So I'm having fun with it. Anyways, let's talk about stocks. So what is it? Why does it matter? How do you make money off of it? Okay, so before I start, let me make it very clear. These videos are not giving you a trading advice. I'm not telling you how to trade stocks. If you want those type of videos, there's a slew of them out on YouTube. You can go find them. We're not going into fundamental or technical analysis to trade. This is just purely educational. It's just to give you guys a better understanding of what it is that you're seeing and hearing every day, and why it matters. So let's talk about stocks. So what is a stock? Basically, you're buying a piece of the company. That is what they're doing. They're selling a piece of the company to the public, and you are able to buy that. So you get a share of the company. So kind of like a share of the pie. So that's really, in its basic form, that's all it is. You are buying a piece of a company. And as such, you are basically, the way the hierarchy works, it's shareholders, board of directors, CEOs, and then everybody else. So the companies have to answer to shareholders. This is why you hear, sometimes you hear the rhetoric about shareholders being upset about, a particular policy or possible venture that the company is wanting to do or pursue, and they have to get shareholder approval. This is why they have to get shareholder approval, is because they are basically top of the hierarchy. So that's how that works. Okay, so what is it? And well, we talked about what it is, but how do you make money off of it, right? Like, what's the point of the stock? The point is that you can go ahead and buy it at cheap, so at a low price, and sell it for a high price, right? This whole name of investing is to buy low and sell high. So how does this work? So let me give you an example, okay? I'm gonna take this camera. We're gonna look at this here. Okay, I already did some calculations for you guys. So this is showing if you bought $10,000 of Amazon, okay, because everybody loves Amazon, everybody knows what it is, okay? So this is the graph of Amazon stock historically since it was listed. So back in 2011, let me move this back to the the stock price I was using for this example. Okay, let me go back here just a little bit more. There it is. Okay, so back in 2011, I just picked January because it's the beginning of 2011. Back in 2011 is when Amazon introduced the idea of Prime. Okay, so back then it was trading at $188.75 per share. If you had bought $10,000 worth of shares, which would have equated to 52.98 shares, okay? And if you would have just held it from then until now, done nothing else, added no new money, no new shares, your $10,000 would have grown to $74,662. with, again, doing nothing else, just holding that stock is what got you that money. So that's the power of investing, is that it allows you to go ahead and grow your money. This is what people mean by growing their money. It's basically increasing in value without you doing anything. It's just doing it on its own. So that's the power of buying stocks and investing in stocks. They have very rapid movements. So if you look, I mean, that's in a period of 8 years, basically 8 years, because we're almost at the end of 2018. So in about the course of 7-8 years, it has grown from $10,000 to $74,000. Again, you're doing nothing. You didn't add any new money to this. So that is why people trade. People also trade trying to capture those capital gains. So you have day traders that are trading on information at a rapid pace. They're trading, so they're trying to buy something low and then sell it, even if it goes just a few ticks higher. They're selling it and then buying into something else for a lower price, and then trying to capture gains off of those. So and then there's the buy and hold strategy, which, I mean, we'll get into this in later videos just so you understand what it is. But I just want to explain what a stock is and how you make money off of it. That's how you make money. It's simply just the increase in value of the stock price. So there are people that they're called value investors, and they will argue for dividends. So dividends, basically, it's a bribe for you to hold the stock. That's really what it comes down to. That's all it is. And I'll get into a different video about why they would ever pay dividends, but there are value investors that would argue that's how you make money. It's not from capital gains, it's from the dividends. And I would argue it's really both. I personally am more of a growth person, where I prefer the strategy of increasing the stock price as opposed to getting dividends. But there's argument for both. I do actually have some investments that just pay out, monthly, and some that are paying out quarterly dividends, so that it gets reinvested and it grows the account balance. So we'll get into that a little bit more later, but for tonight, because it's Halloween, it's been super busy, I'm super tired, just wanted to give you at least a quick overview of what a stock is and how it is that people make money off of it. So you will hear terms like IPO, meaning initial public offering. So there's differences between private stock and public stock. So private stock is just like it sounds, okay? It's not open to the public to buy. Those ones, so the companies that are privately held, the way that they raise capital, which capital is just basically an infusion of cash. I mean, it's money. That's what it is. So the way that these private companies will get an infusion of money into their companies or capital is by going to hedge funds, pensions, endowment plans, and kind of pitching the idea of why they should be, in their portfolio, why these endowment plans and pensions and hedge funds should invest in their company. Public stocks are just that. It's open to the public. Anybody can buy into it, including also the endowment plans and the hedge funds and all of that. Most of them don't, but they can. And so, but the everyday individual investor can buy into it. Mutual fund companies can buy into them. Anybody that's got cash can buy into it. So it's open to the public. And so when you have a company that says it's having an IPO or an initial public offering, it means it's going from a privately held stock to now public stock company. And so the stock market basically is where they would sell that. And then it also becomes not only the place of where they initially sell their stock, for the IPO, but it also becomes what's called a secondary market, meaning somebody's already held the stock, they're selling it, and somebody is buying it. So this is where the buying and selling happens, is on the NYSE, or the New York Stock Exchange. So everyone thinks now that, still has an image of like back in the 70s and 80s of, all these traders on the floor screaming buy and sell. That actually doesn't happen anymore. If you ever watch like any of the news outlets that talk about money, and they're on the trading floor, it's very quiet, it's very calm, and it's mostly people in blue jackets that are on these computer terminals. And that's because everything's gone electronic. So that's where the trading happens. It's no longer the chaotic buy, sell, sell. They don't do that anymore. It's just all done electronically. In reality, something that most people don't know, during Hurricane Sandy, the NYSE actually had thought about keeping it open because it actually does not require humans to be present in order for it to actually function. It still functions just fine because, again, everything is electronic. They, however, decided to close it because of the perception people have that there has to be a human component in order for the stock exchange to work. But in reality, it's actually all automated. It can work without any humans there. So, but fun fact. Anyways, hopefully that helped. If you guys have any questions, let me know. I have officially opened up a YouTube channel for these videos. Simply for the fact that it's just a lot easier for people to gain access to them instead of trying to, see it on my Facebook account. So it was mentioned to me that it's a little bit cumbersome trying to get onto the Facebook account to see these videos. So I decided to throw it onto YouTube, so it's a lot easier for people to see. So this is why now you're going to see the YouTube link on my Facebook account for these videos. But if you guys have any questions, let me know. If you want to subscribe to it, great. If you want to just share the videos with other people, that's even better. But just let me know what you guys think. And if there's any topics you would like me to cover in particular, I'd be more than happy to. But I'll continue to make these videos and just, again, give you general overview. It's not trading advice. It's not any financial advice. We're just going and discussing this in just an educational perspective. So, all right, talk with you guys later.